Preparing for AML KYC Analyst at Bank of America interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is AML KYC, and why is it important for Bank of America? AML KYC is the control framework banks use to understand customers and prevent money laundering, terrorist financing, sanctions breaches, and fraud. At Bank of America, the scale matters. Retail, commercial, and institutional clients create different risk profiles. I would see KYC as the first defense layer, confirming who the customer is, why they need banking services, and whether activity is consistent with their profile. Strong KYC protects the bank, customers, and the financial system. While answering, focus on financial crime prevention, regulatory compliance, customer identification, risk-based controls, and Bank of America's role as a large global institution exposed to complex client and transaction risks. Question 2. Walk me through the customer due diligence process for a new corporate client. I would start by identifying the legal entity, registration details, address, tax information, and business purpose. Then I would map the ownership structure, identify beneficial owners and control persons, and screen the entity and key parties for sanctions, PEP exposure, and adverse media. I would assess geography, industry, products, and expected transaction behavior to assign a risk rating. If anything is unclear, I would request clarification before completing onboarding. Make sure to cover entity identification, ownership structure, beneficial owners, nature of business, expected activity, jurisdiction risk, screening, risk rating, documentation, and escalation where information is incomplete or inconsistent. Question 3. When would you apply Enhanced Due Diligence instead of standard CDD? EDD applies when the customer presents higher financial crime risk than a normal profile. Examples include politically exposed persons, high-risk countries, complex layered ownership, cash-intensive businesses, offshore structures, or negative news involving fraud, corruption, or sanctions. In EDD, I would collect deeper information on source of wealth, source of funds, business rationale, expected activity, and ownership transparency. The goal is not to reject automatically, but to make a risk-based, well-documented decision. In your answer, talk about higher-risk customers, PEPs, high-risk jurisdictions, complex ownership, cash-intensive businesses, adverse media, correspondent banking, unusual expected activity, and the need for senior approval or deeper documentation. Question 4. How do you determine a customer's AML risk rating? I would assess risk across multiple factors rather than relying on one item. Customer type, industry, geography, product usage, transaction volume, delivery channels, ownership structure, and screening results all matter. For example, a domestic salaried individual is very different from an offshore trading company operating across high-risk jurisdictions. Once the score is assigned, it drives controls such as documentation depth, monitoring intensity, approval requirements, and how often the KYC file must be refreshed. Be sure to mention risk-based assessment, customer type, industry, geography, products, transaction channels, ownership complexity, sanctions or PEP exposure, negative news, expected activity, and periodic review frequency. Question 5. What is beneficial ownership, and how would you verify it? Beneficial ownership means identifying the natural people who ultimately own or control a legal entity. I would review incorporation documents, shareholder registers, ownership charts, partnership agreements, trust documents, or reliable public registries. If ownership is layered through multiple entities, I would trace it until individuals are identified, subject to policy thresholds. I would also identify control persons, because someone may control the company even without majority ownership. If the structure looks opaque, while answering, focus on identifying natural persons behind an entity, ownership thresholds, control persons, legal documentation, registries, organizational charts, certifications, and escalation when ownership is opaque or intentionally layered. Question 6. How do sanctions screening and PEP screening fit into KYC? Sanctions screening checks whether a customer or related party is prohibited or restricted under regimes such as OFAC. PEP screening identifies people with political exposure who may create higher bribery or corruption risk. Both are core KYC controls at onboarding and during ongoing monitoring. I would review match strength using identifiers like date of birth, address, nationality, and ownership links. True matches require escalation immediately. False positives must still be documented clearly. Make sure to cover sanctions as legal prohibition risk, PEPs as higher corruption and bribery risk, name matching, false positives, escalation, ongoing monitoring, and why screening happens at onboarding and refresh. Question 7. What would you do if you identify suspicious activity during a KYC review? If I saw suspicious activity, I would document the facts objectively and avoid making unsupported conclusions. I would not alert the customer or relationship team in a way that could constitute tipping off. Then I would escalate through the bank's AML process with supporting evidence, such as unusual transaction patterns, inconsistent explanations, adverse media, or ownership concerns. My role is to identify and escalate red flags. The investigative team determines whether a SAR is required. In your answer, talk about documenting facts, not tipping off the customer, escalating through internal AML channels, preserving evidence, following policy, and allowing investigators or compliance teams to determine SAR filing requirements. Question 8. Explain the difference between source of funds and source of wealth. Source of funds explains where the specific money used in a transaction or account comes from. Source of wealth explains how the customer accumulated their overall net worth. For example, a wire may come from a business account, but the customer's wealth may come from selling a company or inheritance. In EDD, both matter because legitimate-looking funds can still come from questionable wealth, and unexplained wealth can indicate corruption, fraud, or sanctions evasion risk. Be sure to distinguish transaction-level origin of money from overall wealth creation. Include examples, explain why both matter in EDD, and connect them to corruption, fraud, tax evasion, and layering risks. Question 9. What documents would you request to onboard a business customer? For a business customer, I would request formation documents, registration certificates, tax identification, proof of address, ownership details, beneficial owner information, and authorized signer documentation. Depending on the business, I may also request licenses, financial statements, operating agreements, organizational charts, or trust documents. I would confirm the nature of business, expected products, expected volumes, and countries involved. The exact package depends on policy, jurisdiction, entity type, and the customer's risk rating. While answering, focus on core corporate documents, proof of registration, tax identification, ownership information, authorized signers, business purpose, licenses where relevant, expected activity, and jurisdiction-specific requirements. Question 10. How would you handle negative news found during a KYC review? I would first validate whether the negative news relates to the customer, beneficial owner, control person, or an unrelated name match. Then I would assess the source credibility, date, allegations, severity, and connection to financial crime risks such as fraud, corruption, sanctions, trafficking, or tax evasion. A credible recent article from a reputable source deserves escalation. A weak or unrelated hit may be cleared, but I would document my rationale carefully. Make sure to cover relevance, credibility, recency, source quality, customer connection, risk severity, documentation, escalation, and avoiding overreaction to weak or unrelated media hits. Question 11. A relationship manager pressures you to approve a file with missing KYC documents. What do you do? I would stay professional and explain exactly which documents are missing, why they are required, and what options exist to resolve the gap quickly. I understand business urgency, but I would not approve a file that does not meet policy. If there is a permissible exception process, I would follow it and document approvals. If pressure continues, I would escalate to my manager or compliance. Good client service cannot come at the cost of AML control integrity. In your answer, talk about balancing client service with control standards, explaining requirements professionally, documenting gaps, escalating when needed, and not approving incomplete files against policy. Question 12. How would you review a transaction monitoring alert connected to a KYC profile? I would compare the alerted activity against the customer's KYC profile. If the customer is expected to make domestic payroll payments but suddenly sends large wires to high-risk jurisdictions, that inconsistency matters. I would review transaction amounts, frequency, counterparties, purpose, geography, historical behavior, and prior alerts. I would also check whether the customer's business model supports the activity. If the explanation is weak or unsupported, I would escalate for investigation. Be sure to mention comparing actual activity to expected activity, reviewing counterparties, geographies, volumes, narratives, customer history, prior alerts, documentation, and escalating when activity lacks a reasonable business explanation. Question 13. Why is correspondent banking considered high risk from an AML perspective? Correspondent banking is higher risk because one bank provides services to another bank, often across borders. The correspondent may not have full visibility into the respondent bank's underlying customers, especially when nested relationships exist. That creates exposure to sanctions, shell banks, weak AML regimes, and high-risk jurisdictions. Strong due diligence focuses on the respondent's ownership, regulation, AML controls, customer base, geography, and payment activity. Monitoring must continue after onboarding, not just at approval. While answering, focus on nested relationships, limited visibility into respondent bank customers, cross-border payments, high-risk jurisdictions, sanctions exposure, due diligence on respondent banks, and ongoing monitoring obligations. Question 14. What is SAR confidentiality, and why is it important? SAR confidentiality means information about a suspicious activity report or potential SAR decision must not be disclosed to the customer or unauthorized parties. This prevents tipping off, protects law enforcement investigations, and preserves the integrity of the AML process. In practice, I would discuss SAR-related matters only through approved internal channels and on a need-to-know basis. Even casual comments can create legal and regulatory risk, so discipline and discretion are essential. Make sure to cover suspicious activity reports, legal confidentiality, no tipping off, restricted disclosure, protecting investigations, internal need-to-know communication, and consequences of mishandling SAR-related information. Question 15. How would you approach a large KYC remediation project with tight deadlines? I would start by understanding the remediation scope, policy requirements, deadline, and risk prioritization. High-risk clients and regulatory commitments should be addressed first. I would use trackers to monitor file status, missing documents, outreach, approvals, and aging items. To maintain quality, I would follow checklists and perform self-review before submission. If blockers appear, I would escalate early rather than wait. In remediation, speed matters, but poor quality closures create bigger problems. In your answer, talk about prioritization by risk, tracking files, quality control, stakeholder communication, escalation of blockers, consistent documentation, meeting productivity targets, and avoiding shortcuts that create regulatory findings. Question 16. How do you resolve a potential OFAC sanctions name match? A name match alone is not enough to confirm a sanctions hit. I would compare identifiers such as date of birth, address, nationality, passport or registration number, aliases, ownership links, and entity details. If key identifiers do not match, it may be a false positive, but the rationale must be documented. If identifiers align or uncertainty remains, I would escalate immediately to the sanctions team. Potential true matches require urgent handling under bank policy. Be sure to mention comparing identifiers, avoiding assumptions based only on name similarity, reviewing date of birth, address, nationality, entity details, ownership links, escalation procedures, and documenting false positive rationale. Question 17. How do you maintain accuracy while working through a high volume of KYC cases? I manage volume by using a structured workflow rather than rushing. I prioritize cases by due date and risk rating, use checklists for required fields, and review key identifiers before submission. I avoid copying language blindly because small errors in ownership, jurisdiction, or risk rationale can affect downstream monitoring. If policy is unclear, I ask early instead of guessing. My goal is first-time right quality, because rework slows the team more than careful review. While answering, focus on organization, checklists, prioritizing risk, using policy guidance, avoiding copy-paste errors, documenting assumptions, asking questions early, and balancing productivity with first-time right quality. Question 18. Why do you want to work as an AML KYC analyst at Bank of America? I am interested in Bank of America because AML KYC work has real impact at a global scale. The bank serves individuals, corporations, and institutions, so the risk exposure is broad and intellectually challenging. I like roles where accuracy, judgment, and collaboration matter. This position lets me combine analytical review with regulatory purpose, helping the business serve clients while protecting the bank from financial crime, sanctions, and reputational risk. Make sure to connect your motivation to financial crime prevention, Bank of America's global platform, strong risk culture, teamwork, learning opportunities, client impact, and comfort working in a regulated control environment. Question 19. Tell me about a time you disagreed with a stakeholder on a compliance or control issue. In that situation, I would frame the disagreement around facts and policy, not personalities. For example, if a stakeholder wanted to proceed without required documentation, I would explain the specific gap, the policy basis, and the risk of approval. I would offer practical next steps, such as alternative acceptable documents or escalation for an approved exception. The key is staying calm, protecting the relationship, and ensuring the final decision is defensible. In your answer, use a clear STAR structure. Show professionalism, explain the control concern, describe how you communicated evidence, balanced relationships, escalated appropriately, and reached a compliant outcome. Question 20. How do you stay current with AML regulations and emerging financial crime risks? I stay current by combining formal and practical sources. I follow updates from FinCEN, OFAC, FATF, regulators, enforcement actions, and credible industry publications. Internal training is also important because bank policy translates regulation into daily procedures. I pay attention to typologies such as sanctions evasion, trade-based money laundering, human trafficking, fraud networks, and crypto-related risks. The value is applying that awareness to case reviews, not just knowing the headlines. Be sure to mention following regulatory updates: internal training, FinCEN, OFAC, FATF guidance, enforcement actions, industry news, typologies, crypto or sanctions trends, and applying learning to daily case reviews. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.